SAP is plus 9.26% today, and the reasons behind this move tell a bigger story about where global markets are heading. Welcome to MTRS_Market Pulse. It is July 28th, and today we are putting the spotlight on SAP, a major global company. SAP is up 9.26% to €140.20 in today's session. Intraday prices ranged between €142 and €151.56. The long-term fundamentals for SAP revolve around earnings, macro conditions, and sector trends. Investor sentiment is being shaped by SAP stock jumps as earnings beat eases RE fears, barons. Let us look at the broader sector picture. On the geopolitical front, traders are reacting to news that NASDAQ, S&P 500 edge lower as tech stocks drop. Focus on Mideast conflict, MarketScreener.com. This is adding a risk premium across energy markets and supporting safe haven demand. Central bank policy is at the forefront of investor minds. Investor sentiment is being shaped by NASDAQ 100, oil break lifts tech stocks before Fed and megacap earnings test, FX Empire. Rate expectations remain a key driver for growth and technology stocks, which are highly sensitive to discount rate assumptions. On the data front, equity markets are responding to reports that Wall Street ends mixed as investors focus on tech earnings. Looking at how sector peers are positioned. Nintendo made a dramatic move today, surged plus 6.63% to 7,431 yen. Investor sentiment is being shaped by Nintendo stock nosedives following earnings report, despite record-breaking Switch 2 sales, Yahoo Finance. With momentum this strong, traders will be watching the 7,876 yen and 86 sen level closely. A clean break there would confirm the uptrend and could bring in additional momentum buyers. Risk management remains critical, always size positions according to your own risk tolerance. ASML plunged minus 5.80% to $1,655.26 in a significant session. Equity markets are responding to reports that RE surge makes semiconductor equipment super suppliers. The EUV monopoly is one of the strongest competitive moats in all of technology. AI chip demand for the most advanced nodes directly benefits ASML without the execution risk of being a chip maker. Watch for any update on the 2026 to 2027 capacity shipment schedule. Nvidia plunged minus 4.99% to $196.51 in a significant session. Equity markets are responding to reports that Nvidia rides blistering chip sales to another record quarter. The AI infrastructure supercycle shows no sign of slowing. Nvidia's pricing power on H100 and Blackwell chips remains exceptional. No credible competitor is close on performance. The next catalyst is the next earnings call. Any upward revision to forward estimates would push the stock toward new highs. The main downside risk remains export controls. Here is our analytical view on SAP from here. Investor sentiment is being shaped by SAP stock jumps as earnings beat eases RE fears, barons. From a momentum perspective, the next key resistance for SAP sits around €148.61. A sustained break above that level could attract further institutional buying. The main risk to the upside scenario is a shift in macro conditions or central bank tone. This is our analytical view, always do your own research. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Independent market coverage, no subscription fees, no paywalls. If this analysis saved you time and helped you think more clearly about the market, please like the video. It costs you nothing and it directly funds more content like this. Subscribe for daily coverage across indices, stocks, commodities, forex, and crypto. Tell us in the comments, what are you watching most closely right now? That wraps up today's coverage from MTRS_Market Pulse. This content is for educational purposes only, not financial advice. Always do your own research. Stay disciplined, and we will see you tomorrow. That is our spotlight on SAP from MTRS_Market Pulse. Subscribe for daily coverage of the world's biggest stocks.